And like Brian mentioned, as far as that crude, we'll first talk about the corn here. Keep in mind that there is still a crude corn correlation here, so we'll keep on top of that crude issue here really closely. As far as the weather, let's start out with that very quickly. As far as the grains, this map is past 30 days percent of normal precip. So in other words, anywhere, as you can see on this line here, anywhere with a green or blue is above normal precip for the past 30 days. And pretty much almost the entire corn belt is right there with above normal precip. I've had two customers actually tell me here just today that they've already received their entire normal month of July precip already in the past 10 days here. So we'll keep that in mind here as well. So obviously we've got good precip and good soil moisture. As far as this week's weather looks kind of mild. Going into the 6 to 10 day, though, early next week looks like above normal temps for the entire corn belt. Keep in mind, this map Friday afternoon actually centered all this heat actually on the eastern corn belt. And it's kind of interesting how this one is starting to flip-flop a little bit here from day to day. But we've got higher temps coming here. But let's look at this as far as the precip-wise. Though we have heard forecasters talk of below normal precip, keep in mind, at least for the government's perspective, it's confined here to the southern plains. So as of right now, we have just a little heat kicking in next week. But as we saw from the past two graphs, we've got plenty of moisture right here. And then we've got plenty lined up here for the eastern corn belt. So as of right now, we cannot say this is a very bullish forecast here for grains. If they do take out some of this precip and make it hot and dry, then we can certainly maybe start arguing for something, maybe some cause of concern here for the market. As far as other things we can speak of, on Friday, of course, we did get those monthly spot demand reports. Taking out all the other numbers here, just focus on the key ones that we're all kind of watching. You guys may remember for the 2009 column, USDA brought down old crop ending, and they also brought down the new crop ending stocks here. These are some dramatic changes. In terms of our numbers, based on a similar basis, if we use no change in yield, we got something very close to what USDA has, a 1.4. Very close to what USDA has plugged in. We're still assuming that right now that we're running a little higher than what USDA has plugged in for yields. That puts us right around this 1.5, 1.6 range here. But just going as far as the fact and what USDA just told us here, let's keep in mind we have had some dramatic revisions in this new crop number. Keep in mind it was just May. We were talking of a 1.8 billion bushel in stock. Right now we're down to this 1.4. In fact, I did a little work, and this is the largest drop from May to July since 1993. And here's the ending stock numbers here. The blue bars are 2010. Now we've taken some pretty good ticks down. And as I said, 1993 was the last time we had this type of a drop in terms of 400 million bushels in just 2 months. That's a dramatic change. Now, we all know 93 was a weather issue here later in the year, but how about what happened to prices during 93, during this May to June time frame? Kind of the same setup here. I'm going to tell you guys, avoid all this stuff to the right-hand side here. All this was based on some extreme moisture problems which showed up middle to later in the season. But just look at what happened right now as far as the move from, look at that, June low to a July high. It was interesting to see it only lasted about 3 weeks. And as you can see up here, it's about a 16% rally in price from its June low to July high. Kind of interesting. Here's the 2010 chart. June low and a run up in July. And what's also interesting is look at this, 16%. Almost exact same percent. Now, as far as back in that 93 time frame, I'm not saying this is going to happen. I'm not going to say the exact same thing's going to happen, but just kind of point out we had this big rally and then we kind of faded off into August, early September, before those that really the weather problem really hit in later on in the year. So exact same type of move in terms of both type of price response and also the timing, which is kind of interesting to see here. So we're not saying we're calling a top here, but we're saying that, you know what, based on the information that we know right now, we probably made our move. We have to have more new information to get an extended move here higher to get it become a strong bull market. As far as our price outlooks, on Friday we sent out a new chart as far as price outlooks, and they suggested corn could probably reach up to about $4.15 for some reasonable highs here for the summer high before falling back. And as far as the price level, this did say for fall 333 is that fall low, so what that's suggesting here. One thing I will point out is this price outlook is made on our assumed increase in bushels. If we get no increase in bushels, then obviously we're going to have a little higher prices plugged in, maybe something around a 450 price here for December. So for right now, we're going to expect the fact that we are still in a summer rally. This is still a strong market on this end here. We still advise producers still to work on hedges, $4 on up, as far as that December corn contract here. As far as the beans, we're not going to have too much as extensive here. Just wanted to point out the same type of, or a different scenario for beans. As we all know, USDA revised these numbers down a little bit here, but they add a little bit to the new crop. Bottom line is we don't have any arguments with the USDA